My final one that you're going to hate is AMC. Now, I have to apologize to my brother Tim. He said that he saw some news on AMC in our pre-production show getting financing. I was like, oh, that came out last week. This was a new batch, Tim. I have to
Okay.
It was
apologize to
the
you.
900 million was the new batch.
Yeah, because they only had secured a couple hundred million last
Yeah.
week. AMC has been the worries on AMC for going back 9 months has been bankruptcy.
Yeah.
And bankruptcy. So anytime you had a run on virus, AMC would go up, but then immediately sell off because there was this huge, massive. It's why I like Cinemark better, because Cinemark's liquidity is amazing compared to AMC. You know, nice little breakout on Cinemark to start the week there.
Been on that $20 breakout on Cinemark.
You know, and so AMC, one of the problems with AMC is that, you know, this bankruptcy hanging over the head, bankruptcy hanging overhead, bankruptcy hanging over the head. The 900 million is a massive get, which, you know, once again, down the road, long ago, the combination of the financing that they got last week, the 900 million, and their ability to sell shares, which they'll do, make no wrong, AMC flies up to $6-7, they're going to issue a block of shares to dilute the company more, but it does provide more liquidity. And this has been a big thing ever since the March lows on companies. Can they stave off bankruptcy? You know, this is like on Carnival or airlines or this is that. As long as they could stave off bankruptcy at cheaper levels, it's been worth a gamble. Now, the option chain on AMC is extremely liquid, almost to the penny on most options. Massive volume. What do you think about naked puts on AMC at lower levels?
Well, I'll go first. You know, out of everything that we've just looked at here, I mean, there's some interest in some of those gold miner stocks that Matt was flashing through. You could find something there. You know, obviously, like I prefer other gold miners though. Some of the other ones I'm just not into. Out of all of them, there's at least a pattern here, right? I mean, this is a company that has been fighting bankruptcy.
Oh, wait. Hold on. Out of all of them, at least this is a real company.
It's right. And it's got long-term support. It's trying to find volume has been picking up here the last couple of weeks, financing and funding and money coming into the company. It's only got a $500 million market cap. It just secured more money than its market cap. Out of everything you've shown, I have the most interest in this one here, Mark, for sure, for me.
Yeah, Mark, I can get behind your AMC analysis on this one. You got a pretty solid double bottom, triple bottom right there at $2. And I mean, honestly, if we ever get down to $2, I think all of us should think about buying it at 2 and selling it at 4. It's got a pretty simple pattern there at 2. So if you're looking at a naked put, and I'm assuming 25 days out on the monthly mark, February.
I mean, heck, you can get good premiums on the
$4.
$4.
I mean, you can get it in 4 days out right now. But
yeah, right now, you can get good premiums at the 4 or 350. I mean, I mean,
that's a real good. I mean, that's 10% on the price, guys. 30 delta. I mean, yeah, I see it, but I'm going to go standard out. Let's do, say, a 3 delta contract. Man. Let's go. Let's see a little bit more here. So if I do the 2.5, you're getting it above the 2.
Mm-hmm.
You do the 2.5, you can get 20 cents. Yeah. Oh, it's definitely worthy of a naked put. If you're looking at that $2 mark, and you're saying, you know what, I don't care if it goes in the ballpark of 2. I'm going to take the risk. Then I like the 2.5 put option. I don't like the 2 because the 2 just means you're going to take possession. And if it gets under 2, it could get ugly. So you don't like that. I like the 2.5. I could see the 2.5 here.
At 2.5, if you pick up 20 cents, that means your cost average is $2.30. If you take delivery, you could sell cover calls, get it down to 2 over time. If you
2 months, your break even anywhere. Say you have to take a possession at 250 and you're at 210. You're 40 cents upside down. Offset the 20 cent on the cash flow. You're 20 cents upside. 1 month, you're offsetting that risk. That's why I like the 2.5.
I can get behind this, guys.
Yeah. I like the 2.5. Now, I also do like it a little bit directionally. Right? You are seeing a double bottom here nice little W formation. You see the top end of the formation here. Now just let me paint a picture here, because if this thing just runs, I mean, people like me are going to miss it.
Yep.
We just are. That's just who we are. We know our drawbacks. But if you give you a little consolidation between 4 and 4.5 here, like just is it too much to ask for a couple weeks of consolidation?
Set it
That
up.
too much? I know this is Mr. Market in 2021 and everybody's popping out of the money call options like they're smarties, but couple weeks of consolidation, then break out of 5. Ooh, that could get saucy there.